All right, have you ever looked at something and just thought, wait, what? Because that's exactly what we're doing today. We are diving headfirst into the really strange story of a stock, ticker SXTC. It presented a technical puzzle so bizarre, it just seems to defy logic. So let's get right into it. Okay, so here it is. This is the big contradiction, the absolute heart of the mystery. On one hand, you've got just total carnage. I mean, the stock absolutely plummeted, down more than 37% in a single day. But then, on the other hand, it gets a technical score of almost 93 out of 100. I mean, how on earth do you get an A+ for a catastrophic failure? So yeah, that's the question we're trying to answer. How is this even possible? Look, this isn't just going to be some dry market report. Think of this as a technical detective story. We're going to follow the clues, piece by piece, to figure out what really happened, and, more importantly, what that crazy high score actually means.
Okay, every good investigation has to start at the crime scene. And in our case, the evidence is, well, it's brutal and it is undeniable. We're talking about the collapse of the stock's price. There's absolutely nothing ambiguous about this part.
So after all this smoke cleared, this is where SXT landed. $1.25. Just think about that. That single number represents a massive, massive loss of value for anyone who is holding that stock just that morning.
And to put that into perspective for you, that price means the stock was trading in the bottom 4% of its entire range for the whole year. Its absolute low was 95 cents. So we're talking just pennies away from the yearly low. This wasn't just a bad day, folks. This was scraping the absolute bottom of the barrel. Now, a great way to think about these moving averages is like the stock's center of gravity. It's where the price usually likes to hang out. But the current price, $1.25, is way, way below all of them. It's like it's completely broken free from its normal orbit and is just plunging. And what that means now is that those old averages are acting like a heavy ceiling, a huge wall of resistance that makes any kind of recovery incredibly difficult.
So a price collapse this big, this severe, it just doesn't happen in a vacuum, right? It needs fuel. And in the stock market, the fuel for any big move, whether it's up or down, is volume. And in this case, the volume wasn't just high. It was explosive.
I mean, just look at this, seriously. This isn't some gradual increase. This is a complete paradigm shift. The day before, you had about 115,000 shares traded. You know, a trickle. Then, boom. On the day of the collapse, over 110 million shares changed hands. That is not a trickle. That is a tsunami of selling. And this number right here, this quantifies that tsunami we were just talking about. It's called relative volume, or RelVol for short. And all it does is tell you how the trading activity on one day compares to the average. A number like 46.33, honestly, it's staggering. It means trading was nearly 50 times more intense than usual. It was literally everyone trying to rush for the exit door at the exact same time.
You know, there's a word for this in the world of finance. It's called capitulation. It's that moment of pure, unadulterated panic when investors just give up. They throw in the towel. They don't care what the price is anymore. They just want out. And that massive, massive volume spike we just saw, that is the textbook signature of capitulation. Okay, so the case seems pretty open and shut, right? You've got a catastrophic collapse. It's fueled by insane levels of panic selling. Seems simple. But this is where our little detective story takes a twist. Just when you think everything is obvious, a few contradictory clues start to pop. See, deep down in the weeds of the technical data, a couple of indicators started sending a totally different signal. Now, they weren't saying the stock was good or anything like that, but they were suggesting that maybe, just maybe, the selling pressure had gone way too far, way too fast. They were basically screaming that the stock was oversold. So let's look at these clues. And don't worry, you don't need to be some technical wizard to get this. Just think of indicators like these as speedometers for selling. They're built to move between a high point and a low point. So when they slam all the way down to their absolute minimums, we're talking zero, it's like a car that has completely run out of gas. It's a huge hint that the downward momentum might be totally exhausted. And seeing the price hit that lower Bollinger Band, that's just another classic sign that the stock has been stretched to an absolute extreme. And this, of course, leads to the million-dollar question every trader asks when they see signals like these. After a sell-off this brutal, are these oversold readings a sign that we've hit the bottom? Is this a hint that a sharp, fast bounce back is just around the corner? The big question is, could this disaster actually be a massive buying opportunity in disguise? Okay, it's time.
Let's bring all the evidence together and deliver the final verdict. We need to weigh the overwhelming case for a collapse against these faint whispers of a potential bounce, so we can finally decode that mysterious 92.99 score.
And here's the thing. While those oversold indicators were whispering, these other indicators were absolutely shouting. Just look at this data. You've got a super high trend quality index. You have a perfectly negative alignment of the moving averages. The ADX indicator is screaming very strong trend, and the Arun down is maxed out at 100. Every single one of these points in one totally unambiguous direction. A powerful, high conviction downtrend.
And this brings us to the most crucial point of this whole thing. That high score, it was never an endorsement. It wasn't an A+ grade for the company, and it certainly wasn't a prediction that the stock was about to go up. The system was not saying, hey, you should buy this. No, what it was saying was that the technical signals were extremely clear. That's the whole secret. The score wasn't about the stock being good. It was a measure of confidence in the technical reading itself. And in this specific case, the system was basically 93% certain that SXTC was in a powerful, high-volume, completely unambiguous downtrend. The collapse wasn't confusing at all. In a weird technical sense, it was a perfect disaster. And here you have it, the final word right from the technical report, confirming our verdict. So you see, the story of SXT was never really a contradiction. It was a lesson in what these technical scores actually measure. They don't measure quality. They measure clarity. And the message here? Well, it was crystal clear, danger. So, I'm going to leave you with a question to chew on. In the total chaos, the fog of war that the market can sometimes be, what's actually more valuable to you? A really confusing signal that might hint at an opportunity, or an extremely clear signal that screams about a disaster you should absolutely avoid at all costs? It's something to think about.